Crypto guy, you'd lose 8 grand. Market crash guy, you'd miss 260,000 in gains. Finance TikTok is a scam. Here's the math that proves it. Let me show you this video on crypto.
What the actual fuck? I told you this would happen. Pay attention. You could be a someone. I told you guys the market would fly today. Look at XRP right now, 4% the past 24 hours. Solana up 3%, Ethereum up 3%, even Dogecoin up 12% today. That is because when Donald Trump speaks on the economy, the market reacts. He talked about this yesterday. Just a moment ago, President Trump says we have almost no inflation and may drop to 1%. And last night, Trump signed a massive $100 billion trade deal. All 3 of these coins that I'm currently holding are up today. XRP, YFI, and USCR. Look at what happened back in March of this year. Donald Trump announced the United States Crypto Reserve, and he said that XRP, Solana, ADA, Bitcoin, and Ethereum will be included. What happened to those 5 coins? Those 5 coins absolutely pumped on that day, March 3rd, 2025. Many people are saying that they expect Donald Trump to announce the United States Crypto Reserve yet again, just like he did back in March. When he does, I expect those 5 coins to absolutely go insane. Also expect USCR to go insane. That is exactly why I'm holding it. First called USCR out at a $10 million market cap, and it's currently sitting at 71 million. That is over a 7x gain in my free Telegram community. Also, YFI, called that out in my free Telegram community. It's currently at 14% today. It's at $5,200 per coin. First called it out at like 4,500. XRP, I mean, I've been in XRP since 45 cents, buying it weekly. I mean, you guys know I love XRP. So this is an amazing day right here. As always, this is not financial advice. Always invest your own risk and do your own research. And make sure you're following and turning on post notifications to stay updated every single day on the crypto news. And if you guys want to get the news before any other platforms, just message me 3 letters XRP and I will send you a free invite to my free Telegram community.
You could be someone. That's exactly what every high earner tells themselves before losing their kids' college to crypto. But let me show you the math he's hiding. XRP up 4%, Ethereum up 3%. You know what? VTI was up 15%. VXUS was up 28%. Except mine doesn't disappear when somebody tweets. Here's what happened when I tested this. March 3rd, Trump announces crypto reserves. By the time this video was posted, anyone who bought was already under. Why? Because you're not early. You're the exit strategy for the people that bought in January. USCR, 10 million to 71 million market cap, 7% gain. Sounds amazing until you realize something. With a 71 million market cap and thin liquidity, if just 1% of holders sell, the price would crash 90%. That's not investing. That's musical chairs with your mortgage payment. But here's what really gets me. Message me XRP for my free Telegram. You know what's in that Telegram. Pump and dump schemes that target people exactly like you. Educated, earning well, desperate to catch up in retirement because they started late. The average person in those groups lose $8,000. That's 3 months of daycare. That's your property tax. That's the emergency fund that you've been trying to build for 5 years. Speaking of emergencies, this next person wants you to panic sell everything because someone who's been wrong 8 times says the sky is falling.
You guys are going to lose all your money because the market crash is happening right now. That's exactly what I would say if I did not know what I was talking about, but here's why so many people keep saying there's a market crash coming. First, there's the political information we already know, like Trump's tariffs and the government shutdown and interest rates staying high. But there's some insider information that's affecting the market as well, like Michael Burry shorting Palantir and Nvidia. If you don't know who Michael Burry is, he's the guy in The Big Short who predicted the stock market crash in 2008. But what nobody talks about is he's also tried to predict the stock market crash like 8 times after 2008, and he failed. Also, Nancy Pelosi is now selling some of her positions, and she's another big insider trader. So that is even more evidence that the stock market is going to crash, and that is why it's bearing right now. Does this mean it's going to crash tonight? No. The market likes to fake out before it falls. So don't panic sell, just keep liquid in your account. Have exit levels ready because the bull's gone and the bear's waking up. Also, make sure you guys follow me if you want more stock market news.
Yeah, this guy's an idiot. You're going to lose all your money? No, you're going to lose all your money if you listen to this. Michael Burry, yes, he predicted 2008. Since then, he's predicted 17 crashes. 2 happened. If you pulled your 401k every time he said it would crash, you'd have 30% of what you should. Let me put this in real numbers for someone your age. Starting balance of $50,000 in 2010. Following Burry's warnings, you'd have $70,000 today. Ignoring him, $330,000. That's the difference of retiring at 70 versus 55. Nancy Pelosi is selling, did he say Peluski by the way? She sold 2% of one position. Meanwhile, she bought $3 million in semiconductor calls. You think she knows something that this TikToker doesn't? But here's the real crime. Keep liquid in your account. For our audience, you're already too liquid. You've got $40,000 sitting in a checking account earning nothing because you're terrified of another 2008. You know what happened to people who stayed invested during 2008? They doubled their money by 2013. You know what happened to people who sold? They're still working. The average professional your age has $80,000 less in retirement because of panic selling. That's 2 years of additional work, 2 years of missing your kids' games, 2 years of your life gone because some 17-year-old on TikTok said the bears are waking up. At least this next guy has credentials, but too bad his advice only works if you're already rich.
The stock market is dropping, and these are the only 3 things you need to know. My name's Steve. I'm a millionaire former public school teacher, now teaching personal finance for free so you don't have to pay for it. 1. During economic concerns, technology companies usually drop the fastest, while institutions may rotate to value dividend-paying companies or keep their money as cash. These are the popular dividend-paying value ETFs and the places where you can keep your money with high interest. 2. People on the internet will try to scare you. They'll show you scary YouTube thumbnails like these, but ignore the fact that the S&P 500 has gone up an average of 10% every year for the past several decades. 3. I would get ready, because when everyone's afraid and panic selling their investments, I know that this is the best opportunity to grow my wealth, because after every storm, the sun will ultimately rise, and the people who are patient are the ones who are rewarded. The best time to get financially literate and to start investing is right now. If you want to start investing, these are my favorite books and websites to learn from. Or comment invest to join my next beginner's investing workshop today and tomorrow. And yes, it's free. Be patient, keep investing, because millionaires are being made right now.
Steve, millionaire teacher, finally someone qualified. And yes, everything he said is technically correct. Markets recover, patient investors win, buy during fear. You're 42 with 60,000 in retirement savings. You don't have 30 years. Get ready when everyone's afraid. With what money? You're already stretching to max out your 401k. Your emergency fund is half funded. Your wife's student loans are going nowhere. Millionaires are built during crashes. True, if you have cash to invest. The median professional at your age has only $4,000 in savings. The market drops 30%, your job cuts bonuses, your spouse gets laid off. That $4,000 becomes groceries, not Google stock. Steve's not lying, he's just solving the wrong problem. You don't need to optimize returns. You need to find money to invest in the first place. Speaking of finding money, this next teenager claims they started investing at 16. There's just one problem with that story.
I started investing when I was 16 years old, and now that money makes up the bulk of my wealth. So if you want to learn how to start investing yourself, listen up, my friend. So many people online love to tell you how much they make from investing, but for some reason, no one wants to share how you actually do it. So here's a step-by-step guide on how I actually got started. The first thing you want to do is decide who you're going to invest through. And this pretty much just means which website or which app you're going to use to invest through. I personally use Vanguard, so that's the website I'm going to use to show you how to get started. When you're investing in stocks, you can either invest in individual stocks like Amazon, Tesla, Apple, or you can invest in index funds like the S&P 500, for example. And index funds are considered a little bit safer, but with more of a steady growth. And as a quick side note, if you are planning on investing in individual stocks, then I would recommend using Trading 212. Step 2 is actually making your account. So go into Vanguard, and in the top right, you should see open an account. Once you click on that, it should bring you to a page which has all their account options. And for this, you want to choose a stocks and shares ISA, which allows you to invest up to £20,000 tax-free. Once you've done that, it'll ask you to fill out all your details, and it should just feel like a regular sign in to a normal website. Once you've set up your account and everything's doing okay, you want to head over to the button that says invest now. I personally invest in the S&P 500, so I go over to where that is and type in the amount that I want to buy. Once you've done that, it'll take you to a purchase page, and it'll literally just feel like you're buying a regular old item. Then once the transaction's complete, you've bought that stock, you've bought that index fund, and you've officially started investing. I'm no finance guru by any stretch. I've learned everything I know from beginner's guides and books, and the only investing knowledge I know is just to do it consistently. And it doesn't matter if you're investing £20 or £200 or £2,000 a month, whatever you can afford to invest, you should just do it and do it consistently. Hope this helps, my friend, and have a great day.
A 16-year-old teaching investing? Part of me wants to laugh. Part of me is impressed. All of me is concerned. The process, spot on. Vanguard, index funds, tax advantages. If you're starting from zero, this is exactly right. But they are lying about something. You can't open an investment account in the UK at 16 years old, period. So they're either 18 pretending to be 16 and younger for views, or their parents opened their account. I learned from books and guides. You know what books don't teach? The stomach drop when your portfolio loses a year's salary in 3 days. The temptation to sell when your mortgage is due. The reality that 11% average annual returns means negative 30% dips in some years. They make it sound easy. Just invest consistently. You're a 40-year-old with kids. It's not easy, it's discipline. And discipline is exhausting when you're already exhausted. That said, if someone watching this making over 6 figures decides to open a Roth IRA, it's absolutely worth it. Here's the damage report for someone like you. Following crypto guy, average loss of $8,000. That's your emergency fund gone. Market crash profit, missed gains of $260,000 over 14 years. That's early retirement deleted. Millionaire teacher, spending money you don't have during a crash. Hello? Credit card debt at 22%, and teen investor. Solid basic, but making it sound really easy when you haven't lived real life. Total cost, if you followed all of these, $317,000 in missed gains and direct losses. For someone making 120, that's literally 3 years of your life. Here's what actually works for someone in your position. First, automate everything. You don't have time to be clever. Set it and forget it. Second, boring win. Low cost index funds and ETFs in your 401ks and IRAs. VTI in your Roth. No individual stocks. No TikTok trends. Third, your biggest risk is not a market crash. It's not investing enough. You need to find another $500 per month. Side hustle, raise, budget cuts, whatever it takes. Fourth, stop believing you're too late. 42 with $6,000 saved, you can still hit $1 million by 65, but not if you're chasing TikTok scheme. Your assignment, calculate the gap between what you have and what you need. Not what TikTok says you need, what you actually need for your retirement. Post the number below. No shame, just math. Next week, 5 money myths your financial advisor is selling you. And unlike these TikTokers, those lies are costing you thousands in fees. Which one of these hit closest to home? Tell me below. The scariest part, these TikTokers aren't even the worst. The real danger is next week's video.